Good morning, traders. JW here. Trust the last 24 hours or 48 hours in the market has been good to you. Last night last night from my perspective down here in the Southern Hemisphere, we had some CPI data come out for the US, and that caused a bit of volatility in the market. And what we're looking here at is simply my strength indicator, and as you know, I introduced in the last video that I like to trade strength and weakness as well, along as support and resistance. So before we get started, what we want to do is to make sure that you understand that this video is for educational purposes only, and this is not in any way any more than that, and you take full responsibility for any decisions that you make with your trading. I'm just sharing the experience, and because of all the BS that is out there in the trading world and all the rip-off artists and chat groups that retail traders get involved with, and because they're desperate to succeed, and then they find they spend their money on education and they never fulfill the promises that the so-called educators gave them if they bought their products. Because of that, I am trying to be open and honest. I'm not selling anything, and I decided to take on this blown up account which started at $11 and call it the rescue of the trading account, to prove to you that it can be done. And so in order for that to take place, there's some things that we need to have, and one of them is a trading mentor. So here at Trade Zone, we don't trade with money we can't afford to lose. We don't chase the market. We protect our capital. We find a strategy that works for you. And the basis and foundation of what we trade here is based on support and resistance. Now, coming up to this find the strategy that works for you, I want to introduce to you the concept that you need more than one strategy. And so this requires a bit of work. This actually requires a bit of commitment and personal responsibility if you're going to succeed as a trader. So with that being said, let's get into it, because after the volatility of the last 24 hours around the US dollar, there's some opportunities. But I will not be using my baseline strategy. I want to talk to you today about a different strategy that works very effectively for me, but the foundation of it is support and resistance again. So let's get into the charts and take a look before we start. So you can see this is a real live account. It's not a demo account. We started with $11 last week, and we're into the second week. And for the first week, we got up over $100, 121 we started this week with. We are now at 227, and a couple of days ago when I last broadcast, I said that they're nearing key points of resistance and support, and I am taking the profit. And for that trading period of the first day trading of the week, we made $100. Now, we don't always make $100 in a day. We've had a whole 48 hours and I have not been trading, because I knew that the CPI data was coming out. So the first thing that I want to take a look at when I go through my setup routines is the strength indicator. And here's the big push with the volatility over the last 24 hours of the US dollar. It's turned and come in. And so we have this gap between the New Zealand and Aussie dollar. And that interests me. I'm not interested in this here, because this is around the mean test of things. And so therefore, when you see, let me go to here and we'll change the color. We want the divergence between strength and weakness. So let's just go and draw this here. So if this divergence was very strong between the CAD and JPY pairs, and let's just press the CAD and the JPY, and you can see the green's the CAD and the yellow is the JPY. That could be interesting later on in the Asian session after Tokyo opens. And you can see the cross. Let's just get rid of this. And we'll click on the CAD and the JPY so you can see it. So there they are. You can see that's crossing, but it's not ready yet if you take a look at support and resistance. However, the closing of the gap between the Aussie and the New Zealand and the US dollar, there are possibilities here. And there are possibilities there because after a volatile move, this is what you call an inefficient move here. This is where there's more buyers for the US dollar than currencies against the US dollar. And what it does is create a vacuum. And I never trade fundamental announcements. What I do is wait for the fundamental announcements to run out, and then 9 times out of 10 what you're going to find is that this will come back down over the next 24 hours to 48 hours to around about half of that breakout or more. Now I am looking for this gap to close up somewhere in here, and to that end I am trading the Aussie and New Zealand dollars against the US, and I'm buying the Aussie against the US and the New Zealand against the US. Okay, here's in New Zealand, and we're a little bit upside down at the moment, but I'm not worried about that, and I'll show you what I'm doing in a minute. So that's what I'm up to today. I see potential strength in the yen starting to come in. This is the average line here. Once, if the yen gets above this and we start continuing still to point out with the CAD, I would look to sell the CAD against the JPY later today, perhaps as well. When I come in for lunch later on today, I'll probably check the charts because it's an inside day today and I ain't doing too much. I'm not out on the golf course. I'm not fishing because the weather's too crappy. So with that being said, I want to close this off. We know what we're doing. I make my plan. I want to delete the indicator window, and now let's go to the Aussie USD. So here is the strength in the US dollar. We saw this incredible move last night. Yeah, you can trade this, and for those in the Northern Hemisphere, if you had a good scalping strategy, you would have caught some of this. But I don't scalp. I'm looking to day trade or longer, and I base everything around the daily time frame. So if we go to the daily time frame, you can see this was the move down overnight for me. We're now almost at the Tokyo Open, and you can see that this is a key area of support. I am not risking a lot of pips in here to trade back up into here. Now the reason I want to do that is because when I come to an hourly chart, I see a daily mispivot up here. Now I'm going to take these indicators off because I'm not really interested in this strategy with these indicators because it's a different strategy. The strategy that I use purely uses the advantage of after you've had a volatile move. This is an inefficient move, plenty of sellers for the Aussie against the US. This will come up and there will be some sort of equilibrium. Now here's an area of support and resistance in here, and I think that there's a high probability that we will come for this pivot. There's a weekly pivot there and another mispivot there, but generally after an inefficient move, the market comes back and it equalizes, and it might equalize somewhere, usually generally from the breakout to the finish of the move, somewhere about halfway. Doesn't always happen, but it's a strategy that I use. So I am in the Aussie USD and I'm bought it, and my first profit target is just below the mispivot here. So that's the first trade I'm in. The second trade I'm in, I'm doing the same on the pound USD, and as you can see, I'm upside down a little bit at the moment. and that's all good. So we're going to go take a look at the pound USD. The mispivot's up here. Here's the inefficient move. Sucked it out of the market. It's bottomed out. If we go and have a look at the day, you will see that it's pulled up at a key support resistance area. So the risk is only about 25 pips. Now, if it doesn't go, I've only lost 25 pips. So you see my balance was now 227. With the three currency pairs I'm trading today, the Aussie USD, the pound USD, and the New Zealand USD, I am prepared to lose $20 for my trade over those three pairs. That means that if I lose that trade, I still finish up with a balance over $200, and I want to keep that. Now, I'm pretty sure I'm not going to lose all three of those trades, but I will record again at the end of the day, closer to the London opening, to let you know how I've got on. It'll be just a short video. So let's go and change the template again, because we're not interested in these indicators for this strategy. And this is where you must have two or three strategies that work, and you've proved they've worked, you've traded it live, and you've grown your account with these strategies. And if you haven't, you still need to be fine-tuning whatever's going wrong and causing you not to win your trades. Your strategy is no good unless you're growing your account consistently. And one strategy will not suffice, because the market conditions change all the time. So we don't need this here. I'm just showing. So for this strategy, I am just trading support and resistance. We've bottomed out. If we go to the weekly chart and we go like this, you can see that we've been in a strong downtrend with the pound USD, but this is a stumbling block for it, and it looks like it's bouncing off. And because it's an inefficient move, I know from past experience that there is a good probability that the price is going to come back to here somewhere, either equalize and start to go sideways from here, or it could even close up and come all the way back to near the breakout point. Now, if you were trading fundamental announcements, you could have caught all this, and that's great, but I don't trade fundamental announcements. I am not interested. So there's the pound USD, there's the entry. I have not put in the stop losses in yet, but I will. My stop loss will be under this hourly candle. The risk, let me pull that up a little bit more so you can see it. I will put the stop losses in shortly. I will just be putting in here. Now, you measure that. That is only 29 pips I'm risking for the potential of 63. I have 3 positions open. My first take profit target is there. When this trade gets up to around here and hits this weekly pivot, I will be making sure that all my stop losses are moved into here. And then I will wait for the first take profit. If I reach this first take profit target, I will be moving my stop losses to here. I can't lose on the other two. Now, remembering I'm only trading at 10-cent lots because it's still a small account. And the worst that I can lose is $6. I've got 3 positions open at about the same potential loss value. And that comes to just under $20. So what do? We protect our capital, and I know before I enter a trade that if it goes pear-shaped, how much I am going to lose. So if we just, I'll put those stop losses in now so you can see. Alrighty, so here we go. The pound USD, I'm just going to double click on the stop loss. This is as quick as easy. We'll chuck 20 pips in there. I'm always looking for a 1 to 2. So let's just set this up so you see how I do it. So that becomes 40. And we'll adjust the stop losses in a minute. So there's 1. You just need to move quick and nimbly on your trading platforms. 2, 3. Now we wanted the stop loss. We're going to put it there. So it's pretty, oopsie, it's pretty close to where we were going to put it. Trend line, we wanted it just down in there. So I'm just going to move the stop losses down into there like that. Now I need to move profit target, so I'm targeting this in here, just below that pivot. You can see it there. If I flick it up for you, you might be able to see it more. Okay, so there's the first pivot, so that's the first take profit area. And then I want to, the big bad hopeful trade is up there. And I'll tell you what I'm going to do. And then I'll just put that up out of the way. Now remember what will happen if this gets going and we get up to there by that weekly pivot, which has already been hit. I will slip my stop losses to break even at that point. Then once the trade gets to my first profit target of this miss pivot and this miss pivot here, I will then slip my stop loss up there, and I can't lose from that point. So there you have it. That's how I've set this trade up. Let's just quickly take a look at the New Zealand USD. New Zealand USD is very, very similar. I'll be doing exactly the same thing. You can see this big bear candle here. And that was the inefficient move. Now we're looking to trading back somewhere up into here from a support and resistance perspective, because that's a support, and probably you'd agree with me if I put it, maybe you could go up into there. You could argue that, there's no question. Support and resistance is very subjective depending on who the trader is. So let's go in there and let's go down now to the hourly time frame, and you will see that there's a missed pivot just below that resistance area. And I'm banking that this here is going to try for that, because the move from the inflation data, the what I call efficient moves, which fundamental announcements cause, there are more sellers in this case than buyers. That is what I call an inefficient move, and it will either equal out around about halfway, or it'll come up and close back up where it broke out. It can do that too. I haven't got a crystal ball. I am trading a strategy that I've used over and over again that has a high probability of success, and that's why I am doing this. I'm basing it on support and resistance, and we'll take these indicators off because I'm not using this strategy here. And this is where flexibility of trading comes in. You need 2 or 3 different proven strategies that are successful to become a successful trader. So I'm going to leave you with all of that, and I'll record again just before the London Open later on today, because the London Open is 7 o'clock in the evening for me. I'm in the Southern Hemisphere. I'm obviously in the Northern Hemisphere. It's early, and probably a lot of you guys in the Northern Hemisphere won't get up for it, and that's all very well. So there's an alarm going off. It's back to my charts. Tight financial management, guys. Good trading. I wish you well over the next 24 hours of trading, and I'll talk to you just before the London Open again. Cheers.